Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Wednesday, May 11th, 4:30 p.m. New York time. U.S. stock market is closed. I'm going to discuss different companies from different sectors, industries that are penny stocks. Security Exchange Commission regulates the equity market, also called the stock market. Stocks that are trading below $5 are called penny stocks. There's different exchanges that stocks trade on. Some are exclusive for penny stocks, where a lot of them are under $1. Yeah. Some are higher price stocks that go down to $5 and lower than $5. They get notification from the exchange that they're in violation of the policy to be on the exchange, and they need to bring their price up higher, or they risk being taken off that exchange, and then they have to apply to be put on another exchange. Also, penny stocks have a history, just like cryptocurrency, have a history of pump and dump scams from news stories, and promotion companies paid, not necessarily in cash, sometimes it might be a combination of cash and stock shares, to paint a picture of something positive happening soon, to lure the retail investors in, and to unload garbage. Yep, that's disclosed, but most people are not researching that information. They're just looking at the information that's being in front of them. Okay, so we'll look at several stocks here. There were price stocks. Some of them were over $20, some were over $50, and some are below $5, and some are even a lot lower. But again, very similar to cryptocurrencies that's been going on for years. If you've been following the news, many cryptocurrencies are way off their highs, more than 50%, and even worse, and some won't make it. So we're looking at three charts. The far right is the weekly, the middle is the daily, the far left is a 30-minute. I'm showing the 30-minute because the U.S. stock market is from 9:30 to 4 p.m. So there's that half an hour additional in there. And since it's Wednesday already closed, 3 full trading days are already represented in the stock market. We're looking here at Bravo, Bravo, India, Golf. That's a stock symbol. It's 4 letters. You could go on Yahoo or whatever you use, finance, to see what sector industry it's on. That's not really what I want to cover so much in detail, but like I mentioned, they're wide. Also here on the weekly, we see a 3-year duration. If I need to widen out for a long duration, I will. I just want to show you the price range, okay? Price range. The high over 3 years, $12.49. Last price today, $2.48. We identified it way off the highs, yep. And the low was $1.11, which was last year. That's not too far. So huge price range. Look here on the bottom, bring it up. You see the volume, huge volume up there. Clearly, there was a lot of activity. Looking now, here is the high this year. Here is the low this year. Huge range. Yep. So we're no longer at the high for this year, nor at the low this year. Current week, red, lower high, lower low. Lower highs. So again, let's zoom out. See these months, again, weeks, these single weeks, huge trading range. So some activity in news encourage additional traders. And a lot of them, okay, see that high? Took a long time till that high got retested. We had a high there. Took a long time for that high to be retested. So buying necessary on those news events was not a good thing, as well as trading this even after the news, see, or this big trading ranges, see a lot of them have declined. So beginner's guide, if you're going to invest, I recommend you consider investing in a good index. Good index, well, one of the good top 3 indexes could be the S&P 500, NASDAQ 100, as well as the Dow Jones Industrial Average. You only pay what fees your broker charges you, and some of them have 0 commissions. Versus being in a mutual fund, it's like a derivative. You're not actually in the direct stocks in the stock exchange. It's being managed by someone else, charging a lot of fees, and it may be very broad, and that's why the growth may not be so good. Let's go here on the, let's first look at my drawing, see if I have anything on the weekly. Yep, there we go. There's the weekly. I'm showing these penny stocks too because they're brought to my attention at some point in time. It could be days ago, weeks, months ago, and I saved some notes on there when people ask me about them. Look here, between the $5 and $2 range. Okay, let's look at the daily. Lift this up a little bit. And huge volume back there last year. Let's zoom in this year. Notice this, high, lower high, lower high, lower high. And this is like a retest here. Draw a little line there. There we go. Label it as a swing high. So you can see. I'll leave it like that. Well, there you go. High and high. Again, that day, the high was $3.46. It would say here, the high, when I hover over the date, these would change. $3.46, $3.45, 1 penny difference. Yep. So this was a penny high on this day, and the volume would be there on the bottom left when I hover over it. So again, the high on this day, $3.46, and over 29 million. We're here, $3.45, 139 million, 139 million, 29 million. So you had a higher price followed by a lower price, and you had a higher price on lower volume where you had the lower price on higher volume. What's that mean? It means distribution. Smart money selling. Couldn't even make it up by 1 penny. Huge volume. All that was not necessarily new buyers. Were gapped up. Again, whoever had there maybe felt they were in the wrong direction or just want to get out of it. They got rid of it here if they didn't get out of it before. So just because when a stock is going up to retest, it's funny financial instrument, going up for retest of a prior swing high. This is a swing high. Down here, these would be swing lows. That does not necessarily mean it's the best time to be buying it, because it could just be, again, the people that got emotional and realized they were wrong here, and they were holding on to it till it gets in there, and again, it didn't even make it a bat or above, and then huge sell-off, not good. So let's look at the daily. And daily, yep, what a fake out in the morning. A little bit high there, and then roll over. Let's go on to the next. Charlie India Golf. See if I have any drawings on here. Oh, just the default. So again, looking at the weekly for past 3 years, high 411. So it's been under $5 for several years. Low 2 years ago, 2.5 years ago, $1.28. Here we are. Beginning this year, they ran it up. And then past few weeks, it rolled over hard. So we're still inside the range, above the low, below the high of the year. And that 2.5, let's change this to red, has been acting as sometimes a resistance and sometimes a demand resistance supply. So look at that, it's sitting there right now. So we're going to go to the daily time frame and see if we see some formats of opportunities. Let's go. Nope, there's no drawings there. Let's zoom in. Explain this to you again. Some people will not be aware. On this is a single day. When the stock closes that day and opens the next day lower, that's called a gap down, and no prices occurred between there. Just like gas station. You go to a gas station one day, the gas might be $3.97. Next day, $4.12. Yep, it's just automatically that new price. And that's what happens. Why does it gap down? Because there's nobody interested in coming on the bid side, buying it. So the market maker's got to keep reducing the price till someone's willing to buy it. That's really bad, because if you bought it on this day, held it, think it's going higher, you were wrong, and it's constantly gone lower. Yep, so now it's at 250. We might have had a pop up there. Big tail on the top. So let's go to the half an hour. There we go on the half an hour. Popped up in the morning and sold it for the rest of the day. Discouraging, isn't it? Yeah. Let's go to the next. Charlie, Papa, Romeo, X-ray. We'll go a little faster now. Go to weekly. Wow. So this year, over the past 3 years, this year hit the high, $8.75. And 2.5 years ago, low, $2.55. Let's just zoom in. So we had 1 week, had a huge trading range. Wow. From the 550 up to that 8. And currently the trend is down. I went over this past maybe months ago, and I was saying when it was up here, it might come down, retest here. And that's what it's done. Retest it and broke below it. Let's go to the daily. Yep, that was a swing I labeled, and we broke below it. And I have a date on here, so that's when it was mentioned to me. Yep, it was mentioned to me there. In the video I mentioned, looked like distribution occurring, smart money was selling. I was saying smart money selling because there are a lot of prices occurring here, which are huge tails on top, but it wasn't making higher highs. Smart money was selling distribution, and distribution means, again, big money, institutional money selling. I will not be buying, and it went lower as expected. Yep. Don't know how long that person had that position for, but again, hopefully they did good money management. Good money management would be either take profits when you got them or put a real stop loss in, which most people fail to do. Let's look at the half an hour. A lot of whipsaw in there. Go on to the next. Back here on the weekly. Golf, Bravo. Okay, back several weeks ago, I labeled the midpoint in this big candle. Might be a potential retest. And also that big shadow, that big wick on the bottom, said it would most likely retest it. And it did. Came down, retested it, and went lower and broke below midpoint. Intraday, there were trade opportunities there for day trading, but swing trading, I would not have been buying it that whole time. Nope. Down on big volume too. Let's go to the weekly, daily. Yep, there's a daily. Just above that $5. Let's go back where that caller mentioned it. Right there. Again, the stock is Golf, Bravo. Somebody mentioned it there, and it went lower, a lot lower. There's another one. Lima, Oscar, Delta, Echo on the weekly. Look at the high. Last year, $9.85. The low, 15 cents. Again, that low 15 cents, definitely a penny stock, right? Yeah, and the high. Couldn't even make it at $10. What a failure. Let's zoom in here. So I was charting it back then, consolidation, thinking maybe it retest, or I said that, might have said that was a bearish pin bar, huge volume, and higher lows, broke up. Look at that huge pin bar there. Never got retested 100% and rolled over lower. Yeah. Let's look at the daily. There we go. There we go for the year. Wow. That's the high for the year, just above $2. And for the year right now, it's low at the new low for the year. Terrible. 0.7161. Yep. Huge problem. So look at this. Huge volume there, huge. Over 10 million shares. Bearish pin bar. And that green candle, that red candle up there, huge volume. So huge volume at the top. If that was bullish, it should have continued going up. No. Massive amount of selling up there. Panic selling. Yep. And then after that, consolidation and breakdown. So if you bought up here, that was the wrong place. If you were at any point before, you should have been closing the position because that was a sign there. Again, huge volume at a high. It would have been better if it was accumulating there. Go on to the next. Here's an old school one, Nokia. November Oscar Kilo. On the weekly. The high of the last 3 years, $9.79. The low, $2.34. Big difference. Zoom in some more. So for the year, wow. There's the high for the year right there. A lot of red. There's the low for the year. And it gapped down prior. And also, I had a labeled this all the way back here. Let's zoom in some more. And it retested that consolidation area. Demand zone broke below it. Let's remove this. So did what I was looking for action-wise. Yep. Let's go to the daily. See if there's anything interesting. So back then, which was March, drawing those down arrows, that's identified distribution, thinking smart money selling. Let's zoom in some more. Yep, saying smart money selling distribution because the kind of candles that were occurring right there. To not to be buying it. Key either close your position if you're long or play shorts, and look what happened. It worked out very well. Lower, 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 lower. Good job if you took that. Let's look at the intraday. Wow. Really bad shape. Okay. Now let's go on to the next. Here's another old school one. RIG. Very popular one many years ago on the weekly. Wow. Past years, the high of $7.83, low 65 cents. Wow. For 65 cents. From, let's say $7.83 all the way 65 cents. Terrible. As well as 65 cents to the 5. So let's put a little 5 here so we can see the identify this, just to help you see, to know for above or below the fiver. Yep. And let's go look at this year. Here is the low of this year, right there. High this year, already off the retracement. Yep, that $5 is the problem, not holding up. Again, it's garbage. For investing, it's garbage. Let's go to the daily. These are all swing points in the past. Let's go on to the next. Sierra Bravo Sierra. Look at the weekly. Below $10. There's $5. Past several years, the high $15.40, the low $5.54, all in 1 year. Yep. So it is above $5, so making it above the $5 penny stock range. Still interesting to see how things are occurring here. For this year, there's a low, There's the high, it's in decline. Let's go to the daily. Actually, let's see something with the volume. On the upward, good, high volume. High volume. And then distribution. Again, it was not sustainable. On the daily, same thing. Now we're zooming in one, excuse me. I apologize. On the daily, a lot of pump. Mass distribution, a lot of this consolidation area. Consolidation, not following up with new highs. There's signs. Let's zoom in some more so you can see. I showed you the other one, the arrows, the Nokia. That was what was happening here. It was distribution. Distribution, smart money selling. And two more, we're almost done. Again, all these are not necessarily American companies. There's plenty of ones that are American companies that have the same performance. Okay. That's definitely less than $5, less than 50 cents, or at the 50 cents. Low for the past few years, 0.04195, high $6.60. So that would have been, yep, above $5. Here we go on the daily. Got some drawings. Zoom in. Beginning of the year. Wow. Beginning of the year was there, that green candle, and declining since then to a new low. Garbage, a lot of garbage. And the last one, SID, Sierra India Delta. Past several years, the low $1.02 and the high $10.33. That's a big winner, excuse me. For investing, not the best on any of these penny stocks. Trading, yeah, some of them are okay for day trading, some are not. But let's look at this run up. Follow another year higher high. Huge consolidation. Well, let's even do this. Here we go. Huge candle on the top. Huge volume at the high. Consolidation. So again, all the selling that occurred there, there's still a lot more selling here. It was being pumped up, held up by the market makers because they have big orders from some institutions saying, please hold the price up as much as possible. We still have more stock we want to sell. So there's a lot of advertisement, buy recommendations from other brokers getting part of the action, convincing people to buy into it, one of the institutions unloading it. And then all of a sudden, someone realizes, hey, this is garbage, let's get out of it. And look what happened. Huge volume here, 38 million shares. Pumped up one more time. Notice this. Do I have it drawing here? There we go. Let me zoom in so you can see something here, which is good technicals, good technicals. We had a consolidation here. Have a consolidation. And then all of a sudden, we had this new high above this consolidation, luring in new buyers. It closed as a bearish pin bar. In this consolidation, that bearish pin bar would be called a stop hunt. That's a bearish stop hunt. Everybody was totally wrong that bought there. And then that was the trigger after that to go short, close your long. Look at that fast decline. So panicking, a lot of panic. Look at these huge trading ranges. Unloading faster and faster. And so good singles there early on if you took them. Not necessarily going to always be seeing volume. Some of it could be combination. Look at the volume in the candlestick. Sometimes just the candlesticks. Looking here at the daily for the year. It's the high for the year and the low 350. Garbage. Let's just look at there. Yep. Okay. Many thanks for watching.